Hi everyone, today we're talking about 3M stock, which is down 40% from its all-time highs. I'm going to talk about some positives of the stock, negatives of the stock, the fundamentals, and then I'm going to talk about if I'm going to buy the stock myself. Now, actually 3M is a stock that I've got quite a good knowledge on, just because over the last few weeks I have been researching this company and if I should buy into this company, whereas some of the stocks I kind of give a broad opinion on and the basic knowledge I have of that company. With 3M, because I was considering buying into the stock, it basically means that I've had quite a big deep dive into the company. So I'm going to be putting a lot of information out in this video, which is also very useful as well, that I have been looking into the company that much, and also it saves you a lot of time looking into the company and if you're going to invest. So we're going to start off with the fundamentals and then I'll talk about the positives and negatives and then my opinion. So at the moment we sit on a PE of 17 for this stock. Now 17 is actually quite a low PE for what has been over the last kind of 2-3 years. When we look over kind of a broad kind of area of the PE, it is kind of in the middle. It has been a lot higher and at some points it has been a lot lower. And 17 for this stock, like I say, is somewhere in the middle. Now personally, on my opinion, if I was to invest in the stock, I'd like the PE to kind of be a bit more towards 10, if I'm honest. That's kind of where the PE of a stock that's beaten down, where I'd like to get into. When we look at the stock chart itself, obviously it is in a big massive downtrend and it's like catching a falling knife. And personally, in my opinion, I feel like right now in the short term, there's definitely a little bit more downside that could happen into this company, especially with the news it's just brought out, which I'll touch on in a little bit. It's a nice healthy dividend stock at 3.47%. In fact, it might be a little bit higher with the share price going down since this video, or me kind of getting the facts for when I researched into the company. So the 3.47% is a very healthy dividend, and it's also a dividend that's been paid out for a long time, and it's a dividend that's also been grown quite a bit over the last few years, which we'll talk about a little bit further in the video. The EPS growth is 9.72%, which is really good. You know, I like companies with 10% double-digit growth. Obviously, this has been fueled slightly by buybacks, which is also a good thing. But that's why it looks, you know, quite high. When you compare it to the revenue, which is down at 3%, and there's potential for this to go down even more. The revenue is quite low down at the moment. We are sitting at a 40% discount, so if you do like discount stocks and getting it cheaper than what it is, we are currently at a 40% discount, which is really good. And for all of this, you can get the stock for $159 a share. Now, obviously the stock's down massively at the moment, and when we look at the stock market chart, it's at its lowest price since February 2016. So that basically means everyone that's invested into stock since February 2016, which is over nearly 3 years ago, is basically down on their position in 3M. So you're getting the stock for what it was in 2016. Now obviously since 2016, the stock or the company has grown, the revenues have grown, not hugely, but the stock has grown in value. So you might look right there as going, that's a good thing. The company is a price that was in 2016, and the revenue and the company has grown since then. And the dividend obviously is a good strong selling point with this stock. You know, we talk about a dividend that's at 3.47% yield. Obviously this is a company that's paid a dividend out for 100 years, and that dividend as well over the kind of last few years, or for I think it's since like 60 years, has continuously carried on growing that dividend, which is a really good strong sign. So if you do like a dividend stock, you know, potentially this is one that you are looking at. Share buyback is another thing that's helped that EPS growth from that company. So these are really strong things that have really, you know, helped the company over the last few years. Now, kind of few of the negative points with this stock is that I think one of the main selling points of this company is the potential for that dividend and that dividend growth. But one thing that stood out for me when I was researching this company is that it actually has a payout ratio of 55%. Now, obviously, you know, it's not, you know, towards the 70, 80, 90 mark, but for me, when you start talking around the 50 mark and above, that's where I kind of get a little bit like, that's company's paying out quite a high ratio of that dividend right there. And that's something that you've got to be cautious of. If you're solely getting into a company for the dividend and there's potential for that dividend to be cut or paused, you know, it's something that you need to consider. Now, 3M has tended to actually pause its buyback program rather than its dividend. So that's a positive thing, but still something to be really cautious of. The weak growth side of it, and I'm going to tie this in with the second time cutting guidance. When we look at 3M over the last 5 years, and particularly this year as well, its growth is definitely slowing down massively. And one of the causes why the stock's down at this price is that it's actually cut guidance for its second time this year. Most of this is coming from, which is my third point, is the China slowdown. Now, a lot of revenue for 3M, a lot of the well-known products that they have, and they are a very diverse company. A lot of their revenue does come in from China. I think it's something like 33% or something around that mark. A lot of the revenue does come in from China, and with China's economy slowing down, it has affected 3M quite a bit, and that's kind of why the guidance is getting cut, because of that China slowdown. Obviously, we've seen a lot of companies get affected by that, and the China trade war. But 3M certainly has been hurt by that when it has a major part of its business over there, and kind of like the whole Asia area as well. That's kind of affected the company's revenue going forward. So overall, my kind of opinion into 3M. Obviously, I'd like the PE to be a little bit lower. The dividend's really good. The EPS is really good. Your main thing that you're going to have right now is that it all stems from the revenue, and it's cutting guidance and it's not making much money. Because of that, it then forces the kind of high payout ratio on dividend, which you've got to be careful of. But the revenue side of it is something that's a little bit worrying for me. And in my opinion, like, I would rate 3M as a hold. I wouldn't buy the stock. If you do hold a position, I wouldn't sell one. But for me, it would need to be cheaper than what it is right now for me to invest in. For that risk you would have to take on with the revenue that's slowing down, it's at the price it's at, it's a little bit too high for me. I'd like it to be down at a P of 10. Maybe we're talking about $130 entry point, then I would consider it. But for me, there's a few little risks with this stock right now, and it needed to be cheaper for me to be worth investing into the company. But it is a strong company, it's a well-known company, it's a very diverse company, a great dividend, but it has a few risks going forward right now with this slowdown, and it's kind of like juggling around trying to restructure the company by also a few people losing their jobs as well, which is a good thing that they're trying to restructure the company. But when people start to lose jobs as well, you kind of got to, it's a little bit of a risky sign as well. So that's kind of my opinion on 3M right now, guys, is that in my opinion, I wouldn't buy the stock right now. I would have to wait for it to be cheaper. But it's kind of getting to an interesting point where we could consider that it was a buy, but not for me right now. That's my video on 3M today, guys. I hope it helped you if you were looking into stock. Give the video a like, subscribe. Thanks for all the support recently. We're getting towards the 300 subscriber mark right now, so if we could get there, that would be amazing. So thank you for that, and I'll see you in the next video.